Good morning. This is Horizon's Middle East and Africa, our top stories this morning. We speak exclusively with Citi CEO Jane Fraser on the bank's growth strategy and outlook for the Middle East. Qatar condemns statements made by Israeli Prime Minister Benjamin Netanyahu as he signals more strikes on Hamas targets could be coming. And conservative activist Charlie Kirk fatally shot while speaking at a Utah University event. He was a close ally of U.S. President Donald Trump, and a police search for the killer is still underway. Well, it's just gone 8 a.m. across the Emirates. I'm Johanna Versace in Dubai. Big show coming up today. As ever, there's a lot to get through. But we'll start with the markets and take a look. S&P, once again, another record high. I'm a broken record. I keep saying this. But another record high for the S&P. Of note yesterday, Oracle jumped 36% in trading. So it tells you that increasingly the S&P is becoming a bit of a barometer for AI and AI-related stocks as opposed to perhaps more broader concerns about the macro environment right now in the U.S. And speaking of the macro environment, the major data point that's coming up today is that CPI figure. The expectation is that we will get an increase of 0.3% both on headline and on core on the month. Any downside surprise, similar to what we had with the PPI numbers yesterday, and perhaps this trend of higher equities, lower dollars, lower rates will continue. So this is where we are. 2-year yields pricing in basically around 3 rate cuts now by the end of the year. But of course, today's data, CPI data, will be key for whether we price in more than that. And some people are talking about the possibility, real possibility, of 50 basis points cut out of the Fed next week. Brent also in focus, slipping a little bit today in trade, down 0.2%. But again, there you have, per the Citi note, a tug of war going on between bearish fundamentals and then rising geopolitical premium. We speak of the increasing tensions between Qatar and Israel in this part of the world, but then also Russia's drone incursion into Poland yesterday and the real possibility of more secondary sanctions on countries that buy, secondary tariffs, I should say, that buy Russian oil. So keep an eye out on those geopolitical developments. And then euro, just flagging it, we're at 117. Not a lot of movements yesterday, I've got to say, after the appointment of the new French Prime Minister. But, of course, we have the ECB today. They're not expected to cut interest rates. The perception is they're largely done with the easing cycle. But the euro-dollar continues its march higher. Many analysts out there are calling for 120 by the end of the year. All right, let's move on and check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril, good to have you back with us on the show.
Hey, Joanna, good to be back. Now, we're looking at this setup on Asia stocks going into the US CPI print. It's pretty flat on the region's benchmark, but don't forget, this is following on from 5 sessions of gains already, and all things considered, this is a really solid performance. You have the AI undercurrent, right, from Oracle, OpenAI, $300 billion contract, so that's good for AI stocks overall. TSMC is getting a boost. That's what's lifting the TAIEX today. Then you have the Nikkei being lifted by SoftBank after its bets on the financial services firm Klarna paid off after that stock popped, I think, 15% in its trading debut. You have the Kospi yesterday reaching a fresh record today, initially extending gains to about 0.9%, but paring some of that at the moment, following on from the president in South Korea stopping short of dropping a tax hike plan. So that's some of the undercurrent there. And then there's even a positive spin for when you look at these declines you see on the Hang Seng, because this is coming with some of these Chinese firms engaging in a lot of fundraising activity, right? Baba, $3.2 billion offering of convertible bonds. This will be in ADR. So you see some hedging on the way. That's normal. Indeed, some of our strategists have already highlighted if we see the Hang Seng close less than 2% down today, that would be a good outcome to traders. So all in all, this is a setup going to US CPI. Not too shabby, Joanna.
Not too shabby at all, Avril. Thank you so much. Avril Hong in Singapore. Now, Qatar has strongly condemned what it described as the reckless statements made by Israeli Prime Minister Benjamin Netanyahu regarding the country's hosting of the Hamas office. In a video statement, Netanyahu signaled more strikes on Hamas targets could be coming, threatening all nations who harbor what he described as terrorists. Joining us now is Robert W. Jordan, former U.S. ambassador to Saudi Arabia. Thank you for joining our show. There's been a notable deterioration, not just in action, but also in rhetoric between Israel and Qatar over the last 2 days, following the attack. Very strongly worded statement coming out of the Prime Minister. Then the Israeli Prime Minister yesterday responding, insinuating that more strikes could be forthcoming. Let me just ask you specifically within Israel and Qatar, why has there been such a notable deterioration in the relationship, with Israel now essentially saying that Qatar is a country that harbors terrorists?
It's quite odd, Jemana, because it's not like Netanyahu woke up yesterday and suddenly realized that Hamas representatives were in Doha. This has been well known for a number of years, and in fact, at the invitation of the United States, Qatar was willing to host their representatives so that negotiations and diplomacy could be undertaken. So this is quite shocking, I think, that suddenly Netanyahu has changed his tune here. I think he's getting desperate. He has failed to deliver on returning the hostages. He has failed to have any kind of coherent plan for what to do about Gaza. He's contemplating annexing the West Bank. And so we're seeing, I think, a fraying of a wartime environment and leadership here. And this is lashing out at a target that has been known for many years to exist in Doha and to exist there for good reason.
Okay, so, I'm going to quote you. You say that Netanyahu is turning desperate. And I was reading just since Monday of this week, Israel has actually engaged in bombing and campaigns on 6 countries around the region. It hasn't just been Qatar. It's been Palestinian territories. It's been Lebanon. It's been Syria. It's been Yemen. It's been Tunisia, Qatar. What is the end game for all of this? Where is the off-ramp for the Israeli prime minister here?
I think that's the problem. He doesn't have one. And I think that's what's creating some of this uncertainty and desperation. He has had decent arguments for going after sources, for example, in Lebanon, rockets that have been lobbed into Israel from other locations, the Houthis in Yemen. But there has been no such activity emanating from anywhere in Doha. So it makes you wonder, is Riyadh next? Is Abu Dhabi next? I think it is a cascading situation where if there is even one last Hamas operative in any state, they'll be declared as harboring that operative and fair game. That's not what international law suggests should be undertaken.
No. Scary time. I want to bring you also the statement that the Qatari PM put out yesterday, saying no effort will be spared in confronting with resolve any attempts to undermine Qatar's standing and role. But then he also says we will work with our partners to ensure Netanyahu is held accountable. In what way can Netanyahu be held accountable by Qatar and partners?
Well, that's an interesting statement, and I think he went on to say they're going to consider a collective response among the Gulf Cooperation Council states. There may well be a move to encourage the UAE, for example, to withdraw from the Abraham Accords. There may well be a freezing of relations. There may well be an effort in the United Nations Security Council to engage in some kind of sanctions. So we may well see something like that. My guess is they haven't decided what it will be, but there is a menu of options available. None of them, frankly, are conclusive or perhaps even effective against someone like the prime minister, but he is a target now of considerable international disapproval and condemnation. I think that probably is something that he may not be caring about so much right now either. It's his domestic position that he cares about.
My colleague Sam Dahed overnight put out a piece saying that Arab states' assumption that U.S. security guarantees are going to hold up are being tested because of what has transpired this week. How is the event that took place in Doha going to reshape the GCC countries, all of them, their attitude and behavior towards the United States?
I think it weakens their confidence. The United States' influence, perhaps, is a better word than security guarantees. I think it's been pretty clear that the Trump administration has given Netanyahu a blank check. That has now backfired. My guess is we'll see some harsh words behind closed doors between Trump and Netanyahu. But the absence of American leadership on Gaza and so many of these other points seems to have resonated now with the Gulf states. They are worried. They've been worried since 2019 when there was no response to the bombing of Bathgate in Saudi Arabia. So this is something that they will continue to talk about, fret about, but they don't have a lot of options.
One perhaps surprising implication from all of this is the perception amongst Gulf states is Israel has become one of the major agitators in the region. And for so long, it was Iran that was playing that role as the agitator in the region. Do you think there is a possibility that this may actually push some of the Gulf states closer towards reconciling with Iran? Could that be one of the indirect consequences of Israel's actions over the past couple of weeks?
That's a very good point, and I think there is that chance. I think we're seeing great concern, particularly, for example, in Saudi Arabia and their Vision 2030 program, similar programs in the other Gulf states. Conflict and uncertainty are the enemies of foreign direct investment. They are desperate for foreign direct investment in these countries. They have to have a strong support from the international community. But if things are going to get blown up shortly after they're built, there's no one who's going to invest. The international community is going to be very concerned about the possibility of continued violence, continued instability, which is very bad for business.
Yeah. Definitely a very crucial, pivotal, and moment of anxiety for the region. Robert W. Jordan, former U.S. ambassador to Saudi Arabia, thank you so much. Well, the search is still underway for the killer of U.S. conservative activist Charlie Kirk after he was shot at an event in Utah. The 31-year-old was speaking outdoors when he was fatally shot. And Kirk's shooting is the latest in a spate of political violence in the U.S. that's drawing an outpouring of shock and condemnation from Republicans and Democrats alike. President Trump has ordered U.S. flags be lowered to half-staff through Sunday evening to honor Kirk.
It's a long past time for all Americans and the media to confront the fact that violence and murder are the tragic consequence of demonizing those with whom you disagree day after day, year after year, in the most hateful and despicable way possible.
And Bloomberg has learned that Poland has requested additional air defense systems from its allies to better protect itself against Russian incursions. It follows the downing of drones that crossed into Polish territory during Russia's latest airstrike on Ukraine. And sources say Warsaw is consulting with NATO partners for further assistance after invoking Article 4 of the alliance treaty. And still ahead, an exclusive interview with Citi CEO Jane Fraser, where we'll discuss the bank's growth strategy and outlook. But first, Callanish Capital tells us why they recently increased their EM debt allocation. More details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. UBS Group CEO Sergio Armati says the impact of tariffs on the U.S. economy and inflation remains unclear.
The true issue on tariffs will be seen on consumers. In the U.S., we will need to see exactly if there is an inflationary aspect of tariffs. And
is that still unclear at this point?
I think it's unclear. In the U.S., we still believe that growth will be there, but the inflation questions and how it plays out into the central bank policies remains open.
Well, joining us for more on the global market outlook is Haig Bathgate, CEO at Callanish Capital. Good to have you with us on the show. Big day coming up today with CPI data in the U.S. Yesterday, we got perhaps a little taster of how the market could react to a downside surprise with that negative PPI inflation print. Do you think if we get a downside surprise today, so anything sub 0.3% month on month, that 50 basis points could be on the table for next week?
Yeah, I think so. The only thing is it's so politically motivated at the moment, isn't it? Because Trump's been sort of berating Powell now for months.
But he has the justification this time.
He does, yeah, absolutely. Yeah. No, I think the interesting thing with the jobs data, and obviously the US has a double mandate, so it's inflation and full employment. I mean, the interesting thing is that how is all the other economic data held up so well, given the revising in the jobs numbers? So I think that's what the market's going to be looking at. Are we going to get some corroboratory evidence to say, look, the job data has been worse, and is the other data now going to follow suit as well? Yeah,
it's interesting. I think Morgan Stanley put out a report yesterday suggesting that the data is backward-looking, and you probably reached a trough in the labour market at some point in the summer, but that at this point onwards, we're actually going to see signs of things picking up again in the US, which is interesting because it tells you that perhaps there is a reason stocks are behaving so differently to bonds in this environment. Bonds are being backward-looking, whereas stocks are looking forward to future growth.
Yeah, and of course it's a very mixed picture, isn't it, on the stocks? So AI stocks are driven by quite different dynamics than the wider economy. So, yeah, like it's a super interesting time. And if Powell thinks that the economy is going to start resurging again, then obviously he's going to hold off doing the 50 basis point cuts. I mean, it's interesting. It was like less than 10% of people thought we'd have a 50 basis point cut just at the start of last week, and obviously that number is increasing all the time. Yeah. To me, the Fed are going to move quite slowly on this. I mean, obviously they've been quite slow to move, both with raising rates and decreasing them. I just don't see any rationale of why they would do 50 basis points.
They did do it a year ago.
Yeah.
They started that easing cycle with 50 basis points. So,
after being
it's not outside the realm of possibility. Yeah. Let's say today's number comes even in line, so 0.3% month to month. Does that change anything to the weak dollar narrative that's prevailing?
Yeah, well, I think just generally, obviously, the US government wants the dollar to weaken. The question is how much they want it to weaken to improve competitiveness and to encourage onshoring as well. I mean, probably discuss emerging market debt. That's one of the reasons we're quite positive in emerging markets debt, just generally when you get a more benign environment for the dollar. And the US moving to a rate decreasing cycle, that's quite supportive for emerging markets. But yeah, like it's.
So let me ask you a question on EM debt. Why buy EM debt when credit spreads are so tight? Why don't you just buy fixed income? Why don't you just buy US Treasuries? Yeah,
so we're doing this with sort of more sovereign type debt at the moment. I mean, obviously the credit spreads are wafer thin. The thing that we're worried about in the Western world is if there is some sort of shock at the long end of the bond market. I'm talking more about Europe here than the US. Then that could trigger some sort of credit event. And of course, we've got a lot of private market debt at the moment that's just kind of unquantifiable. So I think the risk of some sort of tail event in the credit markets is quite high.
Yeah, and yet you still would buy EM credits relative to DM.
Yeah, it's a relative value bet. We don't want to move completely out of debt. So if we're going to hold debt, we'd prefer to hold it in some of the areas.
Let me pick you up on what you were saying about long-end European debt. Are you referring to France here?
Yeah.
Okay, so how much further widening do you think we're going to get?
Yes, I think to me, France is the canary in the mine, and I don't think ultimately, France will get into too much difficulty because the Eurozone members will sort of club together as they did after the GFC and sort of bailed out Greece in the same way.
You think it's going to get that bad in France?
I think it could. I mean, not in the short term, but I think these things, as we know, kind of gather their own momentum. Yeah. And you forget how quickly things can deteriorate when the market moves into focus in this stuff, and there needs to be coordinated efforts. Or these things can gather momentum. To me, the one worrying area is the UK. I think the canary in the mine is France, but that actually moves the spotlight onto the UK.
I just want to come back to France for 1 second because we have the ECB meeting coming up today. And obviously journalists will ask her about the ECB president, Christine Lagarde, about the developments in France. ECB have a spread stabilization mechanism called TPI, but they only trigger it with unwarranted spread tightening. But what's happening in France now, you could argue, is actually warranted because there is fiscal slippage, expected fiscal slippage.
Yeah, I think that's right. And of course, it's all about confidence, isn't it? So politicians and central bankers have to, always stabilise the system in their rhetoric. And of course, they'll only ever be reactive. They're not going to use these tools preemptively because they're designed for extreme times. So I would expect, as we always see and as we saw in the GFC, which a lot of people kind of forget, it's such a long time ago, people forget how quickly these things can move. But central bankers and politicians will always try to talk with stabilising language and will always step in after the event.
Let's turn back to the UK. The autumn budget is going to be obviously on so many people's radars. But I wonder whether the bigger issue in the UK is not necessarily whether the books can be consolidated or whether politicians can make those difficult decisions, but whether the UK can actually grow sufficiently to start reducing, the size of the debt to GDP, because you have a productivity problem in the UK, and therein lies the issue.
Yeah, I mean, it's the perfect storm in a negative way in the UK at the moment. You obviously got now the Labour Party worried about, in the same way that the Tories were worried about their vote being split with reform on the left. Now you're having exactly the same thing on the right. You're having exactly the same thing on the left now with Corbyn, which means you're going to pander to the minority. So you've already saw this with the welfare bill being voted down, and now with Angela Rayner going as well. There'll be concerns that you're going to have to appease the far left elements of that party. So I think things go from bad to worse, and as we know, and this has been covered very extensively, the redistribution effect when you put it back into public sectors it creates more productivity problems. So to me, and the markets will obviously be the ones who smoke this out, because the politicians aren't going to preemptively deal with this.
Oof, depressing in the UK. Haig, thank you so much. Good to chat to you. Haig Bathgate, CEO at Callanish Capital. Well, coming up, with the ECB all but set to hold today, we get the details of what policymakers are contending with in the euro area. We're live outside the ECB in Frankfurt for a preview, but a bit later on in the show. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Versace in Dubai. Ghana's President John Mahama is celebrating early economic wins. In his first press conference since his election, he highlighted faster growth, easing inflation, and a stronger currency. Mahama said Ghana won't rush back to global debt markets, preferring to consolidate the economy first as the IMF program winds down in December. Botswana is launching a new sovereign wealth fund aimed at building a fiscal buffer for the mineral-dependent country. The fund will also oversee key state-owned enterprises, which officials say will be restructured to become profitable and create jobs. No details were given on its size or investment strategy, but the move follows criticism of Botswana's older Polar Fund, which lacked clear rules on deposits and withdrawals. And coming up, Citigroup CEO Jane Fraser joins me in the studio for a wide-ranging conversation. We'll speak about the banking giant's strategy for the Middle East as it targets the deep pools of money here. Do not miss that exclusive interview that's coming up next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa, our top stories this morning. We speak exclusively with Citi CEO Jane Fraser on the bank's growth strategy and outlook for the Middle East. Qatar condemns statements made by Israeli Prime Minister Benjamin Netanyahu as he signals more strikes on Hamas targets could be coming. And conservative activist Charlie Kirk fatally shot while speaking at a Utah University event. He was a close ally of U.S. President Donald Trump, and a police search for the killer is still underway. It's just gone 8:30 a.m. across the Emirates. I'm Johanna Versace in Dubai. Well, big day coming up for anyone watching U.S. markets. CPI data, that's the big focus. The expectation is we get a 0.3% increase for both headline and core month on month. If we get a downward surprise like what we got yesterday with PPI, then perhaps we will see a continuation of that weaker dollar, rates lower, and equities higher theme that has been trending the last couple of days. This is where markets are this morning. S&P not doing a whole lot, but again, another record high yesterday. Of note, Oracle stock rallied 35% yesterday in trading. Huge rally for that particular name. And of course, the AI theme continues to have legs in the United States. Two-year yields now sitting at 3.54, a little over 3 rate cuts baked into the rates curve by the end of this year. Today will be key. Potentially, we're looking at some people expecting even a 50 basis point cut as soon as next week at the September Fed meeting. So we'll see what today's data brings. Brent in focus as well, down 0.2%, keeping a close eye, obviously, on geopolitical developments, not just in this part of the world, but also between Russia, Ukraine, and the fact that Russian drones actually did enter into Polish territory yesterday. So that will have ramifications on the oil complex versus some of the more bearish fundamentals out there. And then Euro in focus as we head into the ECB meeting today. Let's not forget there's another central bank meeting. They're not expected to cut interest rates, but I suspect the ECB President Christine Lagarde will be fielding a lot of questions around the latest political developments in France and the spread widening that we've been seeing there. Okay, let's check in on how markets in Asia are faring as well. Avril Hong is in our Singapore studio. Avril.
Yeah, Jumana, we're seeing Asia's stock benchmark flat for the moment, but don't forget this is following on from 5 sessions of gains. This is the picture into the US CPI print. We're seeing, though, a strong undercurrent when it comes to AI-related stocks. You talked about Oracle, Surge, and that big contract with OpenAI, $300 billion. That's really a strong undercurrent for the AI-related names in the region. We also have South Korea extending from already yesterday, reaching a fresh record high. Of course, those policy reforms underway in the country, that is a tailwind for South Korean stocks. And then the Nikkei, you can see that outperformance, a lot of this coming from the stock of SoftBank after its bet on a financial services firm, Klarna, which surged 15% on its trading debut. That really paid off. So we saw SoftBank surge as much as 10% in the session. In Hang Seng, we're seeing some of these Chinese tech names, including Alibaba, is a bit softer today, but not to worry because this is against the backdrop of Baba engaging in fundraising, $3.2 billion offering for convertible bonds. So you see investors hedge some of that for the moment. Our strategists have pointed out that if the Hang Seng closes less than 2% lower, that would be a positive outcome that traders see. So this is what you're seeing in Asia stocks for the moment, Jumana.
Yeah, it certainly feels like Alibaba has been the stock to watch over the last couple of weeks. Avril Hong in Singapore, thank you so much. Well, let's turn to this region and Wall Street's increasingly greater focus in the last few years to target the deep pools of money here. That's as Middle Eastern countries push ahead with multi-billion-dollar investment programs to transform their economies and diversify away from oil. One of the firms expanding in the Middle East is Citi, which has been on a global hiring spree to bulk up its services to the ultra-wealthy. For more, I'm really pleased to welcome Jane Fraser, CEO of Citigroup, to the show. It's so nice to have you here in the region, Jane.
Oh, thank you very much indeed. It's wonderful to be back, and it's particularly lovely to be here.
Thank you so much. So, there's plenty of interest in the Middle East region. Maybe just talk to us about what growth opportunities you see specifically for Citi and in which areas. Is it wealth? Is it advisory? Give us more details.
I have been increasingly coming to the region with greater regularity since I became CEO. And that, I think, is a reflection of 3 distinctive traits that the region has. The first is the long-term vision. If you are looking for a sense of clarity of direction as to where the region is headed economically and a more holistic view, you have that long-term vision and leadership here. The second element is just cohesion. There is a cohesiveness around the view that a rising tide will lift all boats. Yeah. And you hear that when you talk to the leaders of businesses and in the government. And then finally, the fundamentals. If it's energy, if it's oil, if it's talent, and strong technical talent, all of these different pieces come together. And I think that is driving a lot of interest, not only from countries that have typically had a long history in the Middle East and indeed in Africa, but India, China, a huge amount of dialogue there.
Yeah. And would you say that those 3 verticals that you just highlighted are most revenue additive for your advisory business or your wealth business? Is there any particular business that you think will grow more?
We're watching our clients be very active across the board, and so really firing on all cylinders. Yeah. As you'd expect with everything that's happening in the world, there's been a lot of engagement around supply chain reconfiguration, a lot around hedging. There's been a lot of dialogue around financing, and the piece that's been very active has been M&A.
Yeah.
A lot of corporates are on the front foot now that we've got a lot more policy clarity as the tax policy and the tariffs and deregulation have been coming together.
It's interesting that you say that on the M&A side because there is a lot more competition. What you're hearing is that margins get squeezed on some of these deals. How do you stand out in that environment, or are there any particular clients that you're targeting in that space to differentiate?
The area that we've been seeing a lot of activity has been cross-border, at which Citi is very advantaged. We've been in the UAE for over 60 years now, for example, many Asian markets for over a century. So there's an advantage just of the depth of relationships and understanding we have here. But it's technology. AI, digital asset space, I think we cannot underestimate how much the client base is innovating at the moment. And so we're seeing quite a lot of activity as industrial companies are looking at technology adjacencies. Healthcare is looking at different adjacencies. So it's a combination of a race for scale and a race to innovate.
And let me just ask you on the wealth side, HSBC, for example, have had to pull back from some of the ultra-rich clients that they cover in the region. Do you sense that there is an opportunity here to pick up where your competition has had to pull out?
Yeah, we have been growing very rapidly in wealth management in some of the major offshore centres. And I am particularly excited about the opportunities here because we're seeing the Middle East, Abu Dhabi, Dubai in particular, as well as Saudi, getting a lot of attention from India, from China, from some of the wealth that's being created in Africa, as well as the traditional areas, and indeed here in the Middle East, because there's a vibrant private sector and a lot of wealth creation. Citi is the bank for progress makers, less so for the retired doctors and dentists internationally. And I think because of that, we become a natural magnet for talent and a natural magnet for clients.
Do you have a target in terms of how many personnel or headcounts you're looking to increase by in the region, or possibly even balance sheet commitment?
We don't have a particular target, but we know that we're growing. And for me, it's really making sure we have the right apprenticeship models in place, we have the right culture in place, and that we're a home for women and men from all over the world that are excited to be part of everything that's happening here.
We spend a lot of time on this show talking about what the region and Africa also can do to attract FDI. What role do you see for Citi in helping to facilitate that process?
We've just had a couple of very exciting different conferences. We had one in Japan where we had many of our African colleagues over in Tokyo and presenting, and there was a huge amount of interest in Japan about investing into Africa, and this could be into Egypt or into Nigeria, Kenya, throughout the region. Similarly, we had another session the week later in Sao Paulo in Brazil, and another area where there was an enormous appetite to look at Africa and start making more of the FDI there. I'd say it's not at the stage where we're seeing huge flows yet, but the level of interest has been enormous, the level of engagement, and we're anticipating quite a lot of activity coming off it. We're just very well placed as a bank that is everywhere to make those connections, but it is exciting to see it happening.
So let's talk about the stock price performance. The Citi stock is up 38% this year. You've outperformed your peers. Do you feel vindicated that the market are finally coming round to your restructuring story?
Look, we are a bank on a mission, and the mission is delivering results. So we're excited about what lies ahead. We can see it in our banking business. Services, which is our crown jewel, just keeps going from strength to strength. It's been a very active market for us, particularly with corporate clients, not only FIs in services. Wealth has been growing well, and the US consumer is resilient. So I think with the focus we've had, the mission that the whole firm is on, and the clarity we have, it's been helping drive record business performance, It's been attracting talent, and it's been delivering.
Is the transformation over?
We're at the back end of the transformation, so it's good to see that. We're happy to get the last pieces done. We're operating mainly at the target states. But when you step back from regulatory transformation, the AI transformation is just beginning. And so when we're looking at the digital asset space, blockchain, when we're looking at what's happening in AI, it's very exciting. I don't think any of us quite know where it ends, but...
Do you see AI fundamentally transforming productivity of the bank?
Yes. I do. We have a set of tools that almost all of our 240,000 employees have around the world access to. I use it myself every day, helping with summarization and helping me be more productive. And that's helping our coders, it's helping compliance, it's helping with HR queries. But then you've also got a lot of top-down use cases. I think the future is agentic, though. That is when we're going to really see the game changer, and we're just scratching the surface there.
I want to ask you about your outlook for the U.S. economy. The feeling is we may actually be seeing a jumbo cut next week out of the Fed. What is the House view on the slowdown that we're seeing in the U.S. labor market? Are you anticipating a recession or just a slowdown in the U.S.?
No, one is always surprised by the upside and the resiliency of the US. So let's look at what's gone on. Is you've got to look at the collective impact of the tax policy, what's been happening with tariffs, and indeed the increasing deregulation that we're seeing. And they work together as a package. I think the most important piece for a corporate: clarity. We hate uncertainty. We like clarity. And our client base now is really starting to act with more confidence now that we've got clarity on those three fronts. So active in the capital market arena, in financing, much more active in investing, less sitting on the sidelines. And M&A has been very, very active indeed, as we talked about. And on the consumer side, pretty robust spending through the summer. And we saw that really across all categories, helped a bit by lower gas prices. But the consumers being fiscally responsible, being more mindful around some spend, but still the spending levels were very pleasing.
So the momentum was pretty strong across all lines of your business in the second quarter. Of course, I don't want to precipitate the upcoming earnings, but can that momentum continue into the end of the year, just in terms of, what you're seeing in advisory, in deal making, and in trading? Because it was a very strong quarter for trading as well.
It was exceptional for us on all fronts. I still see very strong pipelines. I see high level of engagement from clients. I see a sense of urgency as well, given the speed with which industry structures are changing. And there is still growth opportunity. I think growth will be a notch lower. We're keeping an eye on the labour market. It's a low churn market. So not everything is rosy, but we don't see a recession on the horizon.
So Citi increasing, global bank, obviously establishing here, your presence over here as well. But at the same time, we talk about multiple geopolitical shocks. At the top of the show, we were speaking about the latest Russian incursion into Poland. We talk about geopolitical risk over here. We talk about tensions between U.S. and China. As a bank, how do you navigate all of those potential geopolitical sensitivities and the barriers that are going up around the world?
We're in doing business in about 160 countries around the world. We have local banking licensed people on the ground in almost 100. And we've been in many of these countries for a very, very long time. So this isn't classic suitcase bankers fly in, fly out. There's a really deep knowledge of what's going on. And a lot of the services we provide are what help the economies and the companies do business every single day. So for us, there is a mission to make sure that we are operating with resiliency and with rigor to support our clients. And we tend to move activity around the world as clients ebb and flow in different geographies. So the Middle East is probably on a rip for the next decade or so in terms of how much investment and new industries, new clients coming in.
Yeah.
Other areas we'll probably see some more diminishment in. So we flex where it is. Our people are globally minded. They move around the world as to where opportunities are. And it's a moment where Citi shines, where there is volatility. The clients need us.
Well, Middle East, riff on the next decade. That's a good headline, Jane. I do want to bring it back to an article that Bloomberg published a couple of weeks ago that Citi had hired an external counsel to look into some allegations that were made against your global head of wealth, Andy Sieg. You've not commented yet on the outcome of these investigations. Are you satisfied with the outcome?
Look, I gave Andy a very clear mandate when he joined Citi, which was to transform our wealth business. And I'm very pleased with what he, the team and the business have achieved in terms of transforming it. If you look at our investment revenues really since the beginning of the year, they've really outperformed. They've been very strong. We have a terrific team, and I'm very comfortable with the direction that we're going.
And just in terms of some of the allegations that were made, some of the allegations included, intimidating, publicly humiliating executives. Obviously, these are very grave, many of them women. How do you reconcile some of those allegations with the culture that you're trying to build within Citi, your own values that you want Citi to espouse?
I'm very comfortable. We looked into the matter seriously, and I'm very comfortable with where we came out.
Yeah.
We set ourselves with very high standards on all fronts. We hold ourselves to them. And I'm very proud of an exceptional team that we have in wealth, almost half of whom are women on the senior leadership team. They're an exceptional group from within and outside the bank.
Do you think there's been a change for the better in terms of broader Wall Street culture?
I do. From when I first started working in the 80s to now, it's wonderful to see a greater diversity of backgrounds, greater diversity of nationalities. And I look at it within our own bank. We've got a leadership team from all over the world, and that's something we're very proud of. Good people.
Yeah, that's always a positive. I want to round up a question about your return to work policy, because increasingly many of your peers are mandating 5 days back in the office. And from what I see, you don't have that mandate yet. It's still 3 days, from what I understand. Are there going to be any changes on that front? And what has been the feedback so far to this hybrid working model?
Yeah, look, it depends what job you're in. If you're on the trading floor, as you remember from your days, you need to be on the floor 5 days a week. You're there because the information's around. You need to hear what's going on, be with the team. And the same for a lot of the apprenticeship models for our juniors, being near your boss, seeing how the teams are working. There are a lot of collaboration. You need to be together. So I do believe that we are better together. Not all jobs need to be in 5 days a week. I benefited from flexibility. I worked part-time for 5 years when my kids were little. I worked very hard during those 5 years, and it was not to the detriment of my career. So I believe in giving people some flexibility as long as they're delivering and performing their job well.
Well, most definitely not to the detriment of your career. Thank you so much. Thank you for the generosity of your time with us on the show as well. We really appreciate seeing you in the region as well. Jane Fraser, CEO of Citigroup. Well, coming up, with the ECB all but set to hold today, we get the details of what policymakers are contending with in the euro area. We're live outside the ECB in Frankfurt for a preview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersecci in Dubai. Oracle shares continue their surge in the U.S. amid a report that a computing contract between the firm and OpenAI is said to be worth $300 billion over 5 years. That is according to the Wall Street Journal. Bloomberg had earlier reported both firms reached a deal for 4.5 gigawatts worth of data center capacity, and that's enough energy to power millions of American homes. And we'll be watching Alibaba stocks this morning after the firm moved to raise $3.17 billion through an offering of zero-coupon convertible notes. The offering is set to be the largest this year. Now, according to the terms of the deal seen by Bloomberg, the notes will convert into American depository receipts, and Alibaba plans to use the funds to scale up its data centers and expand its international commerce operations. And the ECB is expected to hold today when it meets as policymakers exercise caution in the face of inflationary risks, as well as trade and geopolitical shocks. For more, Bloomberg's Lizzie Burden joins us now from Frankfurt. Lizzie, nobody's expecting an interest rate cut, and actually the signals coming through from ECB policymakers is they're mostly done with the easing cycle. So where are the fireworks going to come from today?
Well, I hope there will be fireworks, Jemana. I can't promise them exactly because, look, the party is maybe just starting for the Federal Reserve, but it's pretty much over, it seems, for the ECB. We've already had this string of rate cuts, and as you say, a hold expected today because the Governing Council wants clarity when it comes to the economic impact of Donald Trump's trade war. And the recent economic data has done a lot to quieten the concerns of the doves on the Governing Council. You've got inflation at 2.1%. You had this upside surprise for Q2 GDP, unemployment's at a historic low. And so in Christine Lagarde's words, the euro area economy is in a good place. That is why most of the economists we've surveyed don't see any more moves before the end of the year, and markets are just pricing a less than 1 in 3 chance of another cut by the end of the year. What will be potentially a bit more exciting are the forecasts, because this is the first batch since that trade deal was struck between Washington and Brussels, and 15% tariffs is bang in the middle of the base scenario and the severe scenario that they set out. So yes, having a trade deal will, you'd think, alleviate some of the uncertainty, but on the flip side, having tariffs is inevitably going to weigh on demand. So you may see, because of the recent data, an upgrade to the forecasts on GDP and inflation in the short term, but a downgrade further out.
Yeah, not just the forecast, but maybe we could get a few French fireworks in the press conference. No doubt she will be asked questions about the most recent French spread widening. What are we expecting there, Lizzie?
No doubt, because, of course, Christine Lagarde once upon a time was the French finance minister. So I'm sure she will be asked what happens if that oats-bundt spread continues to widen. Would the ECB intervene? I'm sure that Christine Lagarde's response is going to be that it's not for her to talk about the politics of individual member states, but they all should be fiscally responsible. But, of course, the way that that is potentially affecting the European Central Bank is that French politics has been shrugged off by the euro, and at the same time this divergence that we started with between the Fed and the ECB that's about to open up is also potentially going to continue this drive of the euro towards $1.20, and that falls on the disinflationary side of the ledger.
Yeah. Lizzie Burden, as always, thank you so much. Live in Frankfurt, outside the ECB. And, of course, we're on watch for that decision at 1:15 p.m. UK time. And then President Christine Lagarde's briefing at 1:45 p.m. UK. You've got to wonder for the euro, though, what is the more important event today, whether it's the CPI data in the U.S., that's 15 minutes before the decision, or the actual decision itself. Yeah, we will find out later today, obviously. Heading into that CPI data, we've got equities, U.S. equities, S&P, all-time record high. Today, not doing a whole lot, trading slightly in the green, unchanged actually now. NASDAQ also not doing a whole lot either. So trading sideways today after a very strong day yesterday yet again. And Oracle was one of the stocks that really outshone everything else, rallying 35% in trading. So that is the picture. And of course, we're keeping a close eye on any pricing change in U.S. Treasuries as well, with a little over 3 rate cuts now priced in the front end of the U.S. yield curve. 2-year yield sitting at 3.5-year, 5.4, and then 10-year at 4.05. It's been a strong rally in fixed income this week. And that is it for Horizons Middle East and Africa. I'm Johanna Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.